In this video, we'll be doing practice exercise 16-2A that can be found in your textbook on page 755. We are going to be doing the adjustments to net income using the indirect method in the operating activity section of our statement of cash flow. The exercise tells us that Carolyn Corporation's accumulated depreciation furniture account increased by $7,500, while $2,750 of patent amortization was recognized between the balance sheet dates. There were no purchases or sales of depreciable or intangible assets during the year. In addition, the income statement showed a loss of $4,000 from the sale of land, and we need to reconcile a net income of $107,500 net cash flow from operating activities. For a statement of cash flow, we always start with the operating activity section, and we will be doing the indirect method throughout the chapter. We start our operating activity section with the net income, and they tell us in this problem that we have net income of $107,500. That is always our starting point for our operating activities. We know, though, that net income doesn't necessarily reflect cash because we do revenues on account and we have some expenses that actually don't have any cash impact. Remember, it's a statement of cash flow. So the first part of our operating activity section is going to be for adjustments to reconcile net income to net cash flow from operating activities. And this is when we need to look at our income statement. For any expense that is on our income statement but had no cash effect, we have to add back into the net income. For example, depreciation. Our journal entry for depreciation is a debit depreciation expense and a credit to accumulated depreciation. There's no cash involved for that expense. However, the depreciation expense would have reduced net income. Therefore, we're going to add back the $7,500 that we had in depreciation expense for this year. Amortization expense is another expense that we have that has no cash impact. Again, the adjusting entry for amortization expense is a debit to amortization expense and a credit to whatever intangible asset we are amortizing. So, for example, a patent or a copyright. Therefore, again, there's no cash impact. However, that amortization expense of $2,750 would have reduced our net income. So we're going to add that back in. We then need to look at any gains and losses that we have on our income statement. And in this case, they show a $4,000 loss from the sale of our land. Any purchase or sale of any non-current asset is dealt with in our investing section of our statement of cash flow. So therefore, we don't want to count it twice. So we are going to add back in the $4,000 loss here. Again, a loss on our income statement would have reduced net income, and we want to reverse the effect. So we will add back the loss, the amortization, and the depreciation expense to our net income to get our net cash flow from operating activities. Again, this is just the first piece of our operating activity section.